Afternoon. Sound check, please. Let me know if you can hear me. All right. Chris, where's your question? Where's your question that I usually do a whole lesson on? um, Chris knows what I'm talking about. All right. So, welcome. I struggled so much today because I couldn't moderate and trade at the same time. And I usually can do that and can be on the treadmill and can be trading crypto and can be managing my swings and no big deal. Today I couldn't just day trade. In fact, I couldn't day trade like one symbol. um, right, J and J. Uh, and be on the mic. So I just needed to get off the mic this morning, and it didn't really get better. Is what I thought. Okay, well I can tell him I can't really trade and be on the mic this morning for some reason. But so I got off the mic and it didn't get any better. The main symbol that I was doing at the open was FFIE, and I think after I got off the mic at 10:30, well, 10:30, it stopped moving. you know. But even other things like NAT, I knew it was at support, so I needed to be paying attention to it, and I was in it short, and I was in big size, popped, and I didn't see it timely, so something was off with me today. Luckily, the a couple of things at the end of the day. I already closed out of my account, but I'm up over three today, 3K. Uh, when I was down the whole day, almost the whole day. And I just feel like when I'm in the zone, it's really hard to lose money. When I am not in the zone, when I'm for some reason, and I don't know what the reason was today. I have no idea what the reason was. When I'm not in the zone, man, you give me a stock that drops 19-20%, and I'm in it short, not this one, the FFIE, and I'm still not gonna make money. I mean, it's weird, and I was trying it short as a scalp off level 2, so I just opened my PNL at 3100. So anyways, it's just it's really really good to know that you can turn it around as long as you don't lose your cool. If you lose your cool, you lose your, you get really emotional, and you're never gonna turn it around. I don't think I ever really have gotten, like, how you get angry or upset or whatever the emotion, however way you want to describe it. You get upset, you start, if I didn't get upset today. I mean, I didn't feel any emotion. I mean, I felt disappointed maybe, but I wasn't like angry or upset, or I didn't feel like I needed to revenge trade or anything like that. And I was able to turn it around. I was down, up until, I don't know, late in the afternoon today. So it's just, I always have to remind myself, and I'm sharing this with you as well, which is, as long as you don't allow yourself to become emotional or to react, to get riled up, you can turn it around. And if you can't that day because truly there were no opportunities, okay, no problem. You'll be able to do it the next day, maybe, right? But if you get emotional, it becomes a habit. From my experience in the past, when I got emotional, every time I lost or I traded poorly and I got emotional, then then the next time as it's bound to happen, the next time I traded poorly, I also reacted got emotional. I couldn't trade, and I made it worse. So it becomes a habit. So whereas if you're not doing well and you kind of take a step back, um, I went and brushed my teeth. I mean, for the second time this morning. So I just to take to get away from myself, really, and them back and no emotions, and just traded with ease almost. So just remember that. Remember not to get emotional. And if you're able to do it once, you're able to do it twice. Guess what? You will be able to do it all the time. But it takes a little bit of discipline initially, not to react. It's like, um, when you begin to not react to, let's say you have somebody in the family that's really difficult, or at work that's just really pain in the what, and if you can learn to not react to what they say or do, or whatever the situation may be, then it gives you power. That person is not able to, if the insult is not received, it's sent back to the person who said it. You know what I mean? So, and the same in trading, I feel, it's the same concept. If you're able to not react and just stay calm, be yourself, and good things can happen. Only good things can happen. But if we lose our cool, as I have a million times in the past, I never ever recover. I will, you'll never hear me come on the mic and say, "Oh, I recovered," even though I was really upset and really angry. I was joking with James about, I don't know what were we talking. What was James talking about? I was joking around with James, and I was having a bad day. So that tells you I was not in a bad mood or upset. And guess what? I recovered as a result. I recovered as a result. So, just goes to show you, how important it is. The emotional element, how important it is in trading. I've heard, I don't know who said this before, maybe on one of those TV shows, maybe, I'm not sure, a long time ago. And what I think I heard is the market beats most people, not because the market is smarter than most people, but because it doesn't have emotions. Yeah? Right, I was joking with James, stealing my ideas, right, telling him, he moved to a really nice area in LA. I said, I'm gonna move in, whatever, right? So, um, even though I was having a bad day, and I don't mind losing so much. What I do mind is losing the result of my bad trading. Like if I call a play and it loses, well, what can I do? Half the plays we're gonna be wrong on about half the time. So half the plays. So it's not totally under my control. But if I lose and it's due to bad trading on my part, that sucks usually, right? But today I didn't let it get to me, and I was able to recover as a result. But what I was gonna say was, they say that the market beats most people because most people have emotions, right? Market doesn't. And so in the long run, the market ends up, long-term accounts ends up, you end up being better off just never getting out, basically, or the market ends up delivering a better performance over time. I read a study one time about 401k plans, and they're trying to figure out which group of people is it, the doctors, the engineers, the janitors, which group of people performed the best. Is it holding it for the ones that tended to hold it short, to trade it actively, to hold it long term, 1 year, 5 years? So they did a bunch of categories, and they found one clear winner, one group of people that performed better than everybody else. Do you know who that group was? I said the same, told you the same, talked about this article a long time ago, in the room. It's dead people. Can you believe it? It's dead people perform the best. It's crazy, isn't it? Because they weren't getting in and out. That's why. And with 401ks, because after most people just forget about them, and then after the person dies, it probably takes a long time before they're able to liquidate and give them to the beneficiaries. So sometimes after a person dies, not that I have any experience with this. Well, I do, because I used to audit 401k plans in my previous lifetime. Yeah, they stay in for before the beneficiaries, the heirs, before they claim the 401k. It's usually a long time before it's distributed, maybe a couple of years at least. So yeah, dead people perform the best. Crazy. It just really goes to show you how bad we are programmed to trade. How bad we are. They're just like naturally wired to lose money in the market. And it's very simple. What's his name? Jesse Livermore explained it beautifully when he said he talked about hope and fear. What did he say? He said, instead of hoping, you must fear. He called them natural instincts. When the market goes your way, you become fearful, and you get out too soon. When the market goes against you, you become hopeful, and you stay in longer than you should had you not listened to hope, right? So that's the issue. And that's just two emotions, hope and fear, which dominate. But there's also greed, which makes people overstay their welcome. Makes people stay in longer than they should. But Jesse Livermore talked just about these two issues, which are, huge. And he called them natural instincts. And it is true that they are natural instinct. When you're having a bad, you're experiencing something really bad in your life, without hope, you get depressed. So hope is a good thing in our life, in our normal lives. But in trading, when you're having a bad trade and you start hoping, oh my God, you're one step away from annihilation, because hope kicks in usually when the trade is going against you, and then hope turns into prayer and kneeling and thinking, oh, I promise I'll never do this again, and then the stock collapses. So that's what Warren Buffett said 100 years ago. And he said also, which is, by the way, in the beginning, a lot of traders take big losses because of hope, because they don't want to be wrong. They don't want to take the loss, because once you book it, it's real. But as long as it's in an open position, it's not yet realized. So initially, most novice traders go broke because they don't take small losses. They always take huge losses, right? But later on, if you become a pro at this, or you try to make a career out of it, you will learn very quickly that not taking your stop is going to be will put you out of the game quickly. So you will learn quickly to take your stop, right, and take the small loss. Okay, but what most of us, like 99.9%, I'm in the 99.9% of the group, 99% of traders get out early also when the stock goes, or the market or whatever goes in their favor, because of fear, because you start to think that you start to fear of giving back the money kicks in, and so you get out, and then you start to focus too much on the red bars instead of paying attention to the uptrend and how bullish the Qs was in this case, and you get out too soon, right? Fear keeps you from making as much money as you ought to. So Those two emotions are incredible in trading. They have such such large consequences, right, on our trading if we're able to not let hope and fear kick in. And remember, fear kicks in mostly when the stock is going in your favor. Fear kicks in. Fear of what? Giving back your profit. And so what do you end up doing? You start focusing on the red bars way more than you should. You start paying an inordinate amount of attention to the red bars, and you ignore everything else almost. And then the opposite happens when the trade is going against you. Start hoping, and now you start paying more attention to the green bars, because the green bars give you hope, right? So those are the two horrible emotions that we naturally have: hope and fear. If you don't have any fear, you'd already be dead, because you probably wouldn't look left and right before you cross the street. you know So those are important for our survival, hope and fear, but in trading they're horrible. Now there's other emotions too. Greed. We talked about greed a little bit. In the past, I noticed that right before the stock was about to flip, I was always adding to it. Meaning, let's say I'm in a stock long, and you know how it starts to accelerate a little bit towards the end, and it's doing really well, and I'm adding to it here, and then shortly after, boom, it drops, and because I added to it near the top, I give back everything. You know what I mean? So why? Oh, because greed kicked in, because now I became too cocky, and I became greedy. So greed is not a good thing either, right? Mark Douglas said we all have four fears. He said, I think 4 fears: the fear of missing out, fear of being wrong, fear of losing money, and fear of giving back profit. So we talked about just one fear, which is giving back profit. But there's actually 4 fears. Fear of missing out, fear of being wrong, fear of losing, and fear of what were they? Missing out, giving back profit, losing, and being wrong. And we all, I think, have to study ourselves a little bit, be honest about it, spend just a few minutes a day thinking about your emotions. The best way for me to do it is to take a walk by myself. I don't want no girlfriend, nothing. Just absolutely by myself. And especially after a bad day, that's when I like to do it. Just take a walk, think about it. Sometimes I'll have either my phone to record my thoughts if I had any epiphanies or any things that I want to change. And so in the past, I used to have a digital recorder, and I would record some of my thoughts. I'm sorry, not a digital, one of those things that you put around your neck. I don't know if that's even digital. But these days, I have an iPhone, so I will from time to time record my certain either type them up in a note or actually record them, record myself. So that's what I recommend. The kind of cultivating some awareness of our emotions and our tendencies, because we're all the same, and we're all a little bit different, and the way we're a little bit different can make us either big time winners, big time losers, and everything in between. So we're all the same, but we're a little bit different, right, in how we respond to stimulus, or to how we react. And that little bit of difference between trader A and trader B makes all the difference in trading. It's like professional sports or athletes, major league players and minor league players. Sometimes the difference is almost negligible. I mean, almost negligible. But just one little bit, the professional athlete does just something just a little bit better. The the amateur athlete might be better athletically, more gifted, but the professional athlete might be just a tiny has does something, just one thing maybe better. And guess what? He gets the big bucks and he's on TV, and we all pay to watch them, and yet the somebody who's just as talented can't do it. Yeah. Anyways, let's see comments. Uh, Dennis. Some of my teacher friends has pensions, so they have no intentions of ever using the IRAs, so they just ignore them, and they've done very well. Just bought index funds and let them sit forever. I hear you. Yeah, I'm sure. I hear you on stops and protecting principle. I find that I'm getting the beaten out of me all the time, taking tons of paper cuts with tight stops. Any thoughts? So it's, look, if you're taking small losses, that's a good thing. If you're taking too many of them, like way too many, that means, look, you're doing what you're supposed to do, but you are maybe not selective enough. You are over trading. Maybe, you see what I mean? Maybe you're ignoring the market in your trading, and most everything sooner or later follows the market. So, again, the small losses are indicative that you're being disciplined. You're doing what you're supposed to do, which is take the small losses. But if there's too many of them, if you're percentage wise, then maybe you're not being selective enough, or over trading, or maybe truly your stops are too tight. Your stops might be too tight. Remember, there's different ways to manage. There's managing on pivots, managing on bar by bar, and managing using moving averages. And the fourth way to manage is by not managing at all. The trade either gets to your target or stops you out. So again, one more time, 4 ways to manage your trades. One is by managing on pivots. So if you're in a stock long, you only raise. So let's just say you took the Qs here long. Let's just say, you took the Qs here long. Then, or wherever, I don't care, or here, doesn't matter. You don't bring your stop up unless you have a pivot. A pivot means a candle with a higher low on either side of the a candle with a higher low on either side, on the left side, right side. So then you can bring your stop up. So in this case, you bring your stop up here, and then it comes all the way back down, almost stops you out, but nope, it pivots. You bring your stop up here, goes up, pivots. You bring your stop one more time. Sometimes it's not is this a pivot? There's a higher low on either side of a candle. You see what I mean? It's not as good as these. But yeah, maybe that's a pivot. Now you start to think, well, I'm getting close to my target. I want to go bar by bar. Getting close to my target. My target is 340. You see what I mean? So there's different ways to manage. But you do want to have you do want to manage in a certain way, and not randomly, or not manage at all. So make sure whatever it is that you're doing, that you're clear about it, that you do it with intentionality, whatever the word is. You're intentional when it comes to how you manage. You're deliberate. You're not just reacting to red bars if you're long, or green bars if you're short. Obviously I don't know, I don't have a record of your trade, so I couldn't give you specific advice. But half the solution is noticing that you have a problem to begin with. is realizing that there is that you have an issue. That's half the solution. You're already halfway there. The other half is going over the trades and figuring out how you can improve, how you can, fix the problem that you're dealing with. Unfortunately, most of the time, and I find this from also not just from my how I used to be as a trader, but also from my life, day-to-day life. I find that most of the time I just don't want to spend the energy. I mean, it takes a lot mentally to figure it out. So I will just, kind of ignore it, rationalize it, but I will not face it. You see what I mean? Something on my to-do list. Let's just say I have a to-do list and something that I really would rather not do, such as calling whatever about whatever, whatever it is. I was going to say about, asking for a refund or, something I just would rather not deal with. Guess what? It'll be maybe the first thing on my to-do list, and it will take me 2 months to do. Why? Because I've been blocking it. I've been rationalizing why I don't have time to deal with it. Or, you see what I mean? The same in trading, I feel. If you have an issue and you recognize it, bravo. I mean, wonderful. But then the other part is having the courage to look and to take a look and face yourself. I think we don't like to look because then what we see is too ugly for us to bear, and it's kind of shakes our confidence in ourselves. But that's part of the issue, part of how to fix things in your life and your trading as well. Okay. Thanks, Rafa. That quote is absolutely beautiful. The speculator's chief enemies are always boring from within. It is inseparable from human nature to hope and to fear. In speculation, when the market goes against you, you hope that every day will be the last day, and you lose more than you should had you not listened to hope. Now, when I was talking about this, I replaced when the market goes against you, you hope that every day. I replace that with bar. Every bar will be the last bar, and you lose more than you should had you not listened to hope. And when the market goes your way, you become fearful that the next bar candle will take away your profit, and you get out too soon. Fear keeps you from making as much money as you ought to. The successful trader has to fight these two deep-seated instincts. You don't have to fight them. You just have to become aware of them. You just have to develop some awareness of those issues. He has to reverse what you might call his natural impulses. Instead of hoping, he must fear. Instead of fearing, he must hope. He must fear that his loss may develop into a much bigger loss, and hope that his profit may become a big profit. I truly knew. I was on a flight from Chicago to San Francisco when I read this passage. I was reading the book in 2005, I think, and I was still working for KPMG, the accounting firm that I used to work for, and I knew there was massive insight in this passage. It was on pages 114 and through 115. It was like a 2-page passage, and I just couldn't really put it into. I couldn't translate. I didn't understand how it applies to my trading until Mark Douglas talked about it also, but he didn't talk about this exactly. He just talked about how we pay an inordinate amount of attention to the red bars when we're long, because the red bars trigger our fear. Okay, and then when we're long and the stock goes against us, we pay an inordinate amount of attention to the green bars, and that's when it clicked, basically. Okay, but anyways, thank you for sharing it. I think everybody should have that, maybe on your desk or in if you collect quotes or whatever. It should always be a reminder. All right, let's see. IPI, you took half because I was at 75% to target, and today I gave back the other half. We talked about it yesterday, remember? I said if I was in it, I'd take the whole thing. because to me it didn't look so good. But we also said, that you accepted that yesterday, that you were gonna take half, right? You accepted, you know. So you accepted that it may be rolling over on the hourly. So you live with your decisions. Sometimes the decisions that we make, I mean, especially in trading, because nobody knows for sure. Even the trades that I feel sure about, I mean, are we 100%? No. Nobody knows for sure what's gonna happen. If you did, you'd bet everything. If you knew 1000% that this was gonna fall, you would short it with every penny that you had, right? But nobody knows for sure, and no guarantees basically. So you make a decision, and if it's based on the best information that you have, then you live with the consequences. It's when you don't make it, you don't make a decision and you let the market decide for you, that we end up making the mistakes. So you know uh, you made the decision to hold half, give it back on the back half. Okay, you move on. Still a good trade in my opinion. Let's see. I'm upset I didn't go short anywhere near the top of this downtrend, even though it is playing out as imagined. A few weeks ago, rally to the 200 fail. How would you have entered short at the top? You couldn't. I couldn't have. But BK, brother, you had a great setup. We had a great setup, which is the concept really well, right? Don't you? Short-term uptrend, long-term downtrend. So short-term daily chart, long-term weekly chart, downtrend. You have the sell setup. When do you go short? If you have an uptrend, you go short when the uptrend on the smaller time frame fails. So here, so you got the entry right there. I mean, perfect entry, but not at the top. At the top, I think it was difficult. I mean, I don't know. I think at the top would have been questionable. But right here, short. That's it. Right here, or on the 1, 2, 3 today. Either there, which should have been the first entry, or on the 1, 2, 3 today. But really should have been the first entry a couple days ago. Okay, so we know the concept. Everybody should know this concept, which was, I spent the whole coaching session last week before the market broke down on it, but I was talking about the 15-minute chart and the 5-minute chart. When the 5-minute is in an uptrend and the 15 is in a downtrend, and I want to go short, you wait for the 5 to break, the 5-minute uptrend. How does it break? We talked about the 3 scenarios. So here's the downtrend. Here's the sell setup on the weekly. I really didn't know. BK feels like he is saying he knew, or that was the scenario he envisioned. I really didn't know that this was going to be turn into a downtrend. In fact, I thought we really did bottom, to tell you the truth, mainly because of how strong Apple was, like retesting the all-time high and doing that monthly buy setup. That I just didn't think this is gonna fail ever. And it's the biggest company in the world, and whatever Apple does, so does the market to some degree. So I wasn't, if you asked me over here whether I was bullish or bearish, I would have said bullish. If you asked me if I thought we had bottomed long term or not, I would have said bottomed long term. But then the sell setup happened. Here it is, and we came crashing down in 2 days. We reversed how many green bars in a row here, or how many up bars did we reverse in just a couple red bars? Huge. That's big. That's the first sign, and it triggered the weekly sell setup. But still, not the green light. Now we said, okay, we're doing the buy setup. If we fail on this buy setup, then all out bearish. So okay. So knowledge needs to we need to act on what we already know. Like, that's another thing. There's so many things in trading that are important, but acting on what you already know and believe is key. It's what makes you as a trader. If you don't act on it, you're never gonna live up to your potential. right? We hear all the time analysts, sports analysts, talk about athletes. Oh, this guy never lived up to his potential. He has so much talent, but never really lived up to it for some reason or another. Maybe he was lazy or didn't have the passion, the motivation, whatever it is. In trading, it's to some extent the same. You have to act on what you know, right? So, but here, you mean on the intraday was down so many bars? I agree, it was, but back off, and this is sometimes an issue for me too. Not thinking long term enough. When you see that the market is down so many bars on, let's say, the hourly chart or the 15-minute chart, before it took out, what was the low here? 313, let's just say. Before it took out 313 is over here. It had already dropped from 320 to 313 non-stop, $7. So yeah, that's always also an issue for me too. But we have to remember that in this case, if you're thinking long term, that you're talking about the weekly sell setup. It's not, don't worry about the 15-minute chart or the hourly chart. Think you're thinking long term. You're talking long term. So why are we, don't let the short term kind of talk you out of getting in on a good trade. You're not too far below the right entry, by the way. So, you never know. We might get another attempt to go higher and then get another sell setup or something like that. You see what I mean? So you never know. Usually you get multiple entries. Look on the way up here how many entries we got. We had this entry. Then we had the entry that I called in the newsletter was over the red bar. And over then we had that entry, the breakout entry. Then you had a buy setup entry on the gap. So that's 1, 2, 3 at least. Then maybe 1, 2, 3 over here. Maybe. But those are the 3 easiest entries, I would say. Easiest on the way up. So we might have 2, 3 entries also on the way down. Okay. Eric, that's helpful. So for scalps and day trades, pivot, then bar by bar sounds best, and not managing other than stop and target best for swings. Not necessarily. It depends on what you do. But I find that most day trades, you would be better off just going bar by bar than anything else, because you will say, oh, I'll manage on pivots, and then you will not follow pivots. You'll really get out if it goes, it drops a lot in your favor. Let's say you're short, you won't stick to your pivot, what you said you were going to manage on pivots. You won't stick to that. So I find most traders are better off managing bar by bar on day trades. Okay, swing trades I like to manage on hourly pivots most of the time, and if it's a longer term trade, then on daily pivots for swing trades. But it depends on what kind of trades you take. What kind of hold periods you have in mind when you take those trades. So it depends. If you look at ENVX 15-minute, I see that and I feel like I should have bought it, but I don't know what setup. It's got a daily buy setup, by the way. Is there a place where you could have gotten in? Let's take a look on the 15-minute. I don't do this hourly pattern, by the way, but I'll take a look. No, not for me. What a move. I mean, that there's no way I would have been able to predict this move up here. And here it is. Huge. So I wouldn't have, Chris. I know it worked like crazy in a bearish market. This is rare. But in this case, I don't see a pattern. I really don't. Neil, how do you approach position sizing when on a bad streak? Like today, when you were negative until noon, you were still using the same size, or reducing and increasing, or does that not affect you and the play? Okay, so I think position sizing should probably cut your size a little bit if you are if you're really struggling. I mean, down multiple weeks in a row or multiple days in a row, sure, you can cut your size down. But trading and my trading performance, while my equity curve is going to look like this, I mean, it's rising on the way up. It's not a straight line. It's like this all the time. It's like that all the time on the way up. Sometimes it dips a little bit and goes back up. So if every time, if every time I struggled, think about it. If every time I struggled, I cut my position size, and then we go up, and now I'm doing well, but on a smaller size. Then I go back to normal size, and then I dip. You see what I mean? And now I cut my size, and then it's the opposite of what you want to do. If you think about it, if you have a positive equity curve, you should do exactly the opposite, Neil, which is after a period of struggling, you should actually increase your position size, because no equity curve is a straight line up. It's mostly up and down, up and down, up and down. Sometimes the base break. I mean, it's fun. Have you ever looked at an equity curve, at your own equity curve? I mean, I see patterns all the time. I see base breakouts, I see buy setups, I see a shakeout, and then it goes right back up. So over time, it should be uptrending if you're making money, obviously, but it doesn't go up in a real straight line. So if you're going to alter your position size at all, then it should be after a period of struggling. Okay, if you're gonna alter it at all, I don't recommend it. Now, obviously, not everybody has a positive equity curve. Some have it negative. Then yeah, you should keep your size really low if it's negative, or if you're if you're struggling. If you're mostly break even and struggling, then after, if you notice that for some reason maybe you've had something happen in your personal life, or it's just you're just not yourself, you're not trading well, or trading is just so darn difficult, then yes, cut your position size. I agree. But I don't alter my position size from day to day. I mean, after 4 or 5 days of losing, I'll just get less aggressive. I don't even think to cut my position size, or my risk actually. I don't cut my risk, which is $500 per trade. What I do is I just try to take it easy and not get and not be as aggressive. Not be as aggressive usually is what I do, and it does the trick. But yes, for somebody who's a little bit struggling, this has been a tough year for sure, no doubt. One of the most difficult years of my career. Still very nice and positive, but I mean, nothing like last year or the year before, or even maybe the year before that. So yeah, it's totally normal to trade smaller than smaller lot or smaller risk per trade. With a 65% win rate, I mean, Neil, that's like 65% win rate is an amazing win rate. Just FYI, if that's true, 65% win rate is really good. It means you're not taking your stop. You're taking big losses for some reason. You're still not taking your stops maybe, but 65% win rate. I would be surprised if we had more than a handful of people in this room that had better than 65% win rate. That's the truth. I'd be surprised if we had more than a handful of people that had a 65% win rate in this room. Okay. You have a hard time accepting loss. Well, then you have a talk have a sit down with yourself, maybe with a beer and your notebook, and just have fun one afternoon. Maybe you have a hot tub and just have a talk. Maybe take a walk, whatever works for you, but have a talk with yourself. Am I really going to, I'm good at stock picking, I know my talents, I know what I am, right? I know what I'm capable of, But am I gonna let my ego um, mm, uh, cut my career short or keep me from becoming the trader that I'm supposed to be? Am I going to let my ego, which is why you have a hard time accepting loss, because it's it's your ego mostly. Most people, it's the ego. It's not the money. It's they don't want to be wrong. They don't want to. So, am I going to let that stop me from becoming who I was supposed to be? If that's what it is, if that's the issue for you, and then work really hard on not, you know, to counteract that issue, to deal with that problem. If need be, try to automate your stops. Like, you put them in the system and, you can't cancel them. Somehow, whatever, if need be. Like, you figure out a way to not be able to cancel them. Now, that might be impossible, but, figure out a way to make it work. Like, if you can't get over the wall, go around it. Figure it out, because is this one issue gonna really, really ruin your career? Are you gonna let it? That one issue, are you gonna let it? It's up to you. Then it's really, how bad do you want it? How bad do you want it? If you want it bad enough, I trust you won't let that one issue stop you from becoming a successful trader, Neil. So just motivate yourself, challenge yourself, and it's all mental. And then, if you're able to do it, wow, you are like on your way to stardom. You are on your way to self-realization as a trader. Okay. Do you recommend purchasing the whole position on the first entry, or legging in? I like to do it all at once, but except with the scalps. With the scalps, I don't like to do it all at once. Meaning, I got a little stock that I'm scalping off the level 2, and I'm trying, I want to buy as much as possible without, but I don't want to buy it all at once. I want to buy 100,000 shares, let's just say, of FFIE. But I don't want to do it all at once, because if I'm wrong, I'm going to lose minimum of 1K. If it goes against me by just 1 penny, and I have 100K in it, well, guess what? I'm going to lose $1,000. So on the scalp trades, I like to add on the way, on the way up, or if I'm short, on the way down. So, but the actual stock trades, like FRAEY, I'm not like, if I don't get in over on the breakout here when at 14, I think it was, if I don't get in here, like with the full lot, right? With the full lot, I mean, I don't know if it's really gonna give me another entry. It probably won't. How often do you find multiple entries on the same trade as a day trader? How often do you find multiple setups? Show me a chart that has multiple entries. They're not, there's not a lot of them. Maybe I can show you one or two out of 100 that I have on my charts, 98 to be exact. Maybe I can look and see, but so I like to get in if it's a chart-based trade, and I like to get in all at once. Okay, and then I'm sized correctly. So if it doesn't work, then I'll just take my loss. But I'm not gonna be sitting around hoping that somehow the stock gives me another way in. You know what? If it gives me another entry, then I'll just add to my position. But I like to get in all at once initially, personally. Okay. Let's see. Sure, Neil. I am. Okay, that sounds good, Neil. I just, I want the best for you, and if you're, and I encourage you to just tackle the psychological issues head on. What scalp worked for you today? FFIE. FFIE worked for me today, but I should have done a lot better with the FFIE today than I did. Okay, but not every scalp worked. The NAT I lost like I don't know how much. NAT I think I lost like 4 hours on it to tell you the truth. On the NAT because all my orders triggered when I was in it short, but it wasn't filling, and I had a bunch of orders and then they all triggered, and I got killed on the NAT. And funny, NAT I already know it's a bad stock to scalp. I already know that. From how often do you see us scalping the NAT? Like when was the last time? Look how much it moves. When was last time it came up in the room as a level 2 scalp? You tell me. When was last time? Must have been, I don't even remember. Maybe here it was good. I don't even remember. It never comes up as a scalpy stock, even though it's super high volume, no spread, and low priced. And it's been low priced for a long time, years. So because it's a bad level 2 stock, it flip flops all the time. So I already knew that, and I still let it get me. It basically has some algos running it, or a smart algo that just can see what the quantity of order quantity and what people are trying to do, and it gets you. So yeah, one thing you, James, and Ivan have in common is that you guys are cool cucumbers. You almost never get upset or excited, where you guys always like that. I'm much better at it in my life than I am in my trading. I actually do get upset in my trading. So I am not a cool cucumber when it comes to trading. I'm much more so in my life, day-to-day life, than I am as a trader. In fact, I'm much more patient in my life than I am in my trading. I'm not patient enough, I feel, often in my trading. I'm either too aggressive or I get out too soon. Too aggressive, I mean like getting in. Too aggressive because I can't wait anymore, or or not patient enough to sit through, stick with the trade until it comes to fruition. But I'm much better in my real life. It's weird. Rich, when you first began to see some consistent profitability, were you using a variety of patterns and strategies, or were you beginning to master one or two? I have studied so hard over the last 6 months, but I'm finding that my win rate is declining the more I learn. I think, Rich, I appreciate the question. I appreciate the fact that you went back and looked and you saw that your win rate is declining. I appreciate the honesty also. So I appreciate all of that. And I am here to tell you that it is natural. As you're learning, I think if you tell me somebody is a total newbie, just a total noob, doesn't know anything about trading other than you can show them how to click on buy and short, or sell and cover, whatever, and somebody who is just starting, has a few months under his belt, which one would I go with? So again, just to be clear, if you told me trader A has just started to learn and is really working hard on his trading, and maybe has just a few months worth of experience, and trader B doesn't have any experience, and you're gonna let them trade, which one would I pick? Which one do you think I'd pick? I'd pick the noob, the total novice trader that knows nothing about trading. Why? Because the novice trader will trade maybe without fear. He doesn't know right from wrong almost. He will just, he'll see something moving up, get in. You'll see something dropping, he'll get in short. You see what I mean? The aspiring professional trader, he will think about the left side of the chart, the right side down here, should I get in? What about the market? And then not able to coordinate all these things all at once, and will invariably end up screwing up even winning trades, even trades that should have been easy wins. Normally you will end up screwing them up because you're aware of a lot of different concepts, but you're not able to operate from that knowledge and coordinate, or be aware of all these concepts simultaneously and make the correct decision. So your experience was exactly my experience. Exactly. I had a better PNL when I was doing it part-time than when I first went full-time. Now, some of you in the room know James. I mean, know James's story. He, in 3 months, after having never traded before, day traded ever before, 3 months later, I already invited him to become a co-mod in the room because this is unique. James is not typical to go from zero and then 3 months in and then boom, you're already there. But so I don't want you to always think that, oh well, James did it in 3 months, and why shouldn't I? That's not typical. That's not typical. Initially, it's a lot of pain and suffering, and then you're at some point will be able to function from the knowledge that you're acquiring. So I don't think, I've heard a lot of educators in the past say, "Oh, focus on one pattern. Know it like you know yourself first before you move on to any other patterns." That never worked for me. As a trader, I like to be well-rounded. I like to be able to take advantage of whatever the chart is doing, whatever the stock is. Is it a breakout, pullback, whatever pattern it throws at me. But I gotta know my patterns really well. But I can't just limit myself to one pattern. That's not my style. I don't know of very many good traders that can only that specialize in only one type of setup, right? Most of the time, that's wishful thinking. Most of the time. Why? Because I don't know. I think a lot of times the one setup that you specialize in is not, will be good for, will be available, abundant for a couple of days a month, so, and then every day you're going to show up and not trade. I'm not saying that's a bad thing, but I mean, how many people do you know have the discipline to not trade most of the time and really wait for that setup that they're familiar with, that they're supposed to be mastering? I don't know of very many traders that have the discipline nor the inclination to wait for that one setup. So, and then the other thing is, like I said, I like to be able to see and react, to see what the stock is doing and be able to take advantage of it, whether it's a buy set, a pullback, a breakout, a 1, 2, 3. So I don't want to limit myself to just one setup. But look, we're two different people. If that's how you work in your life, then maybe give it a try. Pick your favorite setup. Make sure it happens all the time. It happens on a daily basis or so. And focus on it, and see what kind of results you have. We don't normally like to experiment. We don't give ourselves the chance to experiment, like I'm suggesting, because we all want to be winners and make money already by yesterday. You see what I mean? We don't have the time to put on a batch of trades and study the sample and see how that batch did. No, we just want to trade and make money right away. And trading, unfortunately, is more of a journey. It's and your next 5 miles are gonna depend on your last 5 miles, and that's trading. And you never arrive. So take your time. Figure things out, figure yourself out, figure out what you like, what you don't like, and then good things can happen. It takes a lot of energy, mental, and takes some courage, takes some patience, and then any desire for instant gratification needs to be pushed to the side. Let's see. Now, if Neil, okay, yeah. Sammy, I know you said you didn't trade FFIE well, but wondering how you would have entered added if you did play it correctly. I think I saw it really early. I had it from the open and on one of my level twos. In fact, on the I have 6 level twos open on the very first level two. That's where I put the one that I'm trying to watch, the closest. I had it on there because I made $7,000 yesterday, mostly from the FFIE. So FFIE has been something that I've been doing really well with, and I wanted to watch it. So I mean, I was in it right away. As soon as it started to break down, I was in it this morning. But now, how would you have done it? I was doing it, trying to do it off the level 2. But every time I looked away, it would drop, and I would miss it. And then I would try to get it, and then it would flip against me. So that's what happened this morning. I was moderating, trying to find some gap trades so that everybody can participate, because I know not everybody does these level 2 scalps. And every time I was looking away, it either flipped on me on level 2, and I can't show you exactly where on the chart it flipped on me, or I missed the good entry. But looking at this chart just on the 5 minute, there's a 1 2 3. There's a 1 2 3. Here's another 1 2 3. Okay, got pretty messy here. Breakdown there was also part of the mess, so I wouldn't have done it. I mean, just in hindsight, and based just on the chart. So there's a couple of entries already, 1 2 3, another 1 2 3, and that's just on the 5 minute chart. I don't know what the 1 and the 2. I'd have to look, to go back to the 1 and the 2. So I don't remember where I entered, exited, and things like that. But it would, I probably was in it the first minute, and then maybe got out, and then maybe missed the entry here. I don't know. Maybe tried to get in here and then got shaken out, and then it dropped. So I messed it up. I just wasn't really focused on it, and I messed it up. But like I said, there are, looking at the chart, there are a number of entries. Here's the 2 breakdowns. That's pretty good. And then here is a grind. So if in it, keep it. There's a flip or a trail. So I don't know. So I don't, because, with scalps, you don't, like, if I showed you the FFIE trades by symbol, I'll show you. Does it show? Anyways, if I showed you how many trades I took on the FFIE, I mean, so I don't know, see what I mean? A lot of different trades. Mostly 5,000, 10,000 maybe sometimes. So, I don't know exactly where I entered and exited this morning, but I just, messed it up. Let's see. Couldn't jump in. Yeah, and yeah. I think level 2 on it was okay, but I mean, I know it was amazing yesterday, level 2 on it. Today maybe wasn't as good. Maybe it was a little bit difficult. I do agree that maybe it wasn't just me. It was also a little bit difficult. Like I saw at the end of the day that it was going up, but it would go from, I don't know what the price was, like let's say from 15 to 16 on the FFIE. If I were to, I like to show usually the other level 2, which is sterling, but I already closed out of sterling. So let's say it went from 16 by 17 to 17 by 18 without the offer weakening. It would just jump to the next offer without it weakening. I saw towards the end of the day that when it was moving up, that it just would go up to the next level without the offer weakening, which makes it hard to predict whether to get in it or not. So I think that was the issue with FFIE today. Now, I thought it was a good long today, even though that's not a good pattern at all, because look at the volume spike, and the market appeared to have bottomed. So that helped a lot, knowing that because it would have trailed me out. Like over here, I was in it, and it came in a penny or two over here. I don't know where exactly, like this candle right here, that candle, but I had confidence that it bottomed. Like this is higher because of the volume today, so many bars down. I said it on the mic. So that helped. Let's see. NB filed for bankruptcy. Got it. Let's see. So is it even gonna open? NBEV. I've seen that happen also before, where the stock, is up a lot and then it's bank. We saw it during the pandemic a couple times. The stock is doing really well. It's a penny stock. That day it gets halted and then bankruptcy. And then it doesn't even reopen. Where does it go then? It goes on the pink sheets, OTC market, over the counter. So I remember seeing the same thing happen a couple times during the pandemic, last couple of years, where again penny stock had a really nice day, but then it got halted, and then the news was it filed for bankruptcy. Crazy. Um, yeah, Mike. I read your second comment there, Mike. Yeah. I mean, unfortunately, I wouldn't be. I don't think I'd be as upbeat as I am right now if I didn't recover today. Um, and it's not so much about the money; it's about, it's about the poor trading on my part. So that's the part that that kind of sticks with you a little bit, and so yeah, I hear you. It is frustrating. It is. It really is. When I'm losing or when I'm not trading well, guess what? You think I'm feeling good? No, but I try my best not to act it out. Not to, you see what I mean? Not to trade based on those emotions, because then I'm gonna just have a disaster, a total disaster. I'm gonna go from being down, I don't know what I was down, like maybe at the most 13, 1500, to being down 13, 15,000. Do you put as much weight on your swing trades as you do day trades? I mean, capital allowance for swing trades, because you only get 2 to 1, unless you have a portfolio margin account, which TradeStation doesn't offer, but Interactive Brokers offers. E-Trade offers, I think Thinkorswim offers, Schwab offers, but they turned me down when I applied for a portfolio margin account, because they saw that most of my trades are day trades, and the portfolio margin is not useful necessarily for day trades. It's only for holding overnight. You get 6 to 1, about 6 to 1, I think, on average. I think Interactive Brokers is like 6.6 to 1 leverage overnight. So, but with TradeStation, it's like the only major firm that doesn't offer it, and that's where my swing accounts are. I have 2 of them, one for earnings, one for swing trading. But I've been really this quarter, I took all the earnings plays in the swing account, in the same account. So I get 2 to 1, 2 to 1 leverage overnight. So yeah, no, I most of the time use more capital for my swing trading than I do for my day trading. Most of the time, for day trading, I only need about 100K probably, and that's only because I do the scalps, the level 2 trades. But for regular trades, I could probably do just fine with 30 to 50,000. I mean, for the day trade, let's just be realistic, 50,000. I mean, could I do it with 30? Yeah, I'm sure I could. But 50K, assuming I didn't do the scalps. But with the scalps, sometimes I'll end up having 100K or 50,000 in a position. Something like the FFIE, easily. So, well, that's 50K right there. You know what I mean? So, but if I didn't do the scalps, I'm pretty sure I would be okay with 50,000. Okay, but normally I need about 100, maybe more sometimes, depending on how active I am. Okay, all right, guys. I do have to run, so I hope you enjoyed today's discussion, and I will talk to you in the morning. Thank you so much, and yeah, speak to you in the morning. I hope you act on some of the things that we discussed, especially if I took the time to emphasize them and encourage you to take action. I really do hope that you act on those things. Okay, the people that we talked with today. Okay, thanks guys, take care. Talk to you in the morning.